Today, we're diving into a really fascinating story from the market. It's a bit of a shocker, actually, and it holds a huge lesson for any of us who invest. We're going to look at the anatomy of a massive stock crash for a company called Inspire Medical Systems. So here's the big question, the mystery at the heart of it all. How on earth does a stock completely fall off a cliff? We're talking a 40% drop right after posting what looked like a strong earnings report. It makes no sense on the surface, right? Well, let's unpack it. First, let's just get a feel for the sheer scale of this drop. This wasn't just a bad day at the office. This was a total bloodbath for the stock. In a single day, 40% of the company's value just gone. I mean, can you imagine waking up and seeing nearly half of your investment wiped out just like that? It's a staggering number. And this didn't just happen out of the blue. If we zoom out, you can see the stock was already having a tough time. It was flying high at $330 not too long ago, then it slid down to $225. And then this crash happened, sending it all the way down to just $78. A truly spectacular fall from grace. Okay, so here's where the story gets really, really interesting. You'd assume for a stock to crash that hard, the company must have reported some truly awful news. But you'd be wrong. On the very same day as the crash, the company reported its numbers. And guess what? They beat Wall Street's revenue estimates. And they beat their profit estimates, too. So by all the usual metrics of how they did in the past, it was a good, solid report. Which, of course, brings us right back to our main question. If the report card for the last 3 months looked good, why on earth did the market react like the sky was falling? This is the paradox we've got to solve. And here it is. Here's the answer. The reason for the crash has nothing to do with what the company did do. It has everything to do with what the company said it was going to do. The culprit has a name, forward guidance. And this gets at one of the most important things to understand about the stock market. It's not a rearview mirror, it's a crystal ball. Investors are always trying to price in what's going to happen 6 months, a year, or even further down the road. The past is interesting, but the future is what drives the price. So what is this forward guidance? It's actually pretty simple. It's when the company's own management team gives their official forecast. They're telling everyone, hey, here's what we think we're going to make in the future. And in Inspire's case, what they said, well, it sent a shockwave through the market. All right, let's get specific. Let's look at the actual numbers that caused all this panic. What did Inspire say that was so bad? Okay, here's the table that tells the whole story. On the revenue front, you can see they lowered their expectations. That's not great. But the real bomb was the earnings per share, the EPS. That's the profit. They took the forecast from over $2 a share and slashed it, all the way down to between 40 and 50 cents. That's not just a cut, that's a complete gunning of their profit outlook. And the CEO basically spelled it out. He said the change was because of a double whammy. They expect to make less money, and at the same time, they have to spend more money on marketing to get patients. For an investor, hearing less revenue and higher costs is a massive red flag. So the company's future looks tougher, and the stock got absolutely hammered for it. But does a massive sell-off like this mean the game is over? Or could there be an opportunity hiding in all this chaos? So here's our take. It's really important to separate the company from the stock price. The underlying business, it's still profitable. The fundamentals are still pretty solid. But yes, it's clearly facing some major challenges, some serious headwinds. The upside, if you can call it that, is that after a 40% haircut, the valuation is starting to look a whole lot more realistic. This doesn't mean you should rush out and buy it, but it absolutely makes Inspire a compelling company to put on your watch list. And in the end, it all boils down to this one question. When you see a crash like this, is it a signal to panic and run for the hills? Or has the market overreacted, creating a potential opportunity? The real lesson here isn't just about Inspire. It's that in investing, the biggest risks, and often the biggest rewards, aren't found in yesterday's news, but in the story the numbers tell about tomorrow. And of course, just a quick reminder before we sign off, this explainer is for informational purposes only. It is not financial advice. Please, always do your own research before making any investment decisions. Thanks for tuning in.